Welcome to the Valuation Desk by Highland Global, where SBA business valuations speak bank. In this session, we'll dive into a key topic for SBA 7A business valuations: normalization adjustments. These tweaks to a business's financials are critical to show what a hypothetical financial buyer can truly expect. We'll explore how they shape free cash flow, why they matter for SBA loans, and why synergies don't belong in fair market value valuations. So what are normalization adjustments? Normalization adjustments, or Addbacks, are changes to a business's historical financials to reflect what a hypothetical buyer would see. No special perks or one-off costs. Appraisers remove discretionary expenses like personal travel, one-time costs like legal settlements, and non-core items like rental income from unrelated property. The goal is to answer, what earnings would a buyer expect if they ran this business without the current owner's quirks? These adjustments ensure a market-based picture, vital for SBA valuations. First up, owner compensation. Owner comp is a big deal in small businesses. Owners often pay themselves too much or too little, maybe to dodge taxes or because profits allow it. That's rarely what a new manager would earn. Appraisers adjust to a market salary, what it costs to hire a qualified replacement, using data from sources like salary.com. This shift directly affects free cash flow, the cash a buyer can count on, and sets the business's true value for SBA 7A loans. Why do appraisers reconcile addbacks to tax returns? Sellers might claim, I ran personal expenses through the business, add them back. But tax returns tell a different story. CPAs often reclassify personal costs as distributions to avoid IRS trouble. If a seller says $15,000 in travel is personal, but the tax return shows $5,000, the addback's inflated. Appraisers always check tax filings to ensure addbacks are real, avoiding overstated earnings that could mislead SBA lenders. Verification of addbacks is non-negotiable. Due diligence means examining the proof: payroll records for salaries, receipts for personal expenses, invoices for one-time costs. Unverified addbacks raise red flags, casting doubt on the whole financial picture. For SBA 7A loans, where trust is everything, shaky addbacks can tank a deal. Lenders and buyers need solid documentation to back every adjustment. Don't be surprised if the appraiser asks for the CPA who prepared the tax returns to verify the information. And don't be surprised if the CPA isn't willing to do that for obvious reasons. What addbacks matter? Not every expense needs adjusting. A $300 snack budget or $500 phone bill won't sway a buyer's view. Appraisers focus on material addbacks, not the nickel and dime stuff. This keeps valuations clear and focused. Picture a business with $200,000 pre-tax income. The seller suggests the following addbacks: owner salary of $80,000, but a replacement manager costs $100,000. Subtract $20,000 to bring compensation to a market rate. Personal auto expenses of $12,000. Add back $12,000 verified. A $1,000 holiday party. No change. It's business related. A $400 coffee service. Too small to bother. Net adjustment. Subtract $20,000 from pre-tax income for owner comp adjustment, then add back $12,000 for personal auto. Net adjustment is $8,000 subtracted from pre-tax income. Normalized income is $192,000. Keep in mind, under the fair market value standard, synergies like cross-selling or cost cuts from a buyer's other businesses are excluded. SBA valuations assume a hypothetical buyer, not a specific one with unique advantages. Normalization adjustments give lenders and buyers a clear view of a business's true earnings. Owner compensation must be market-based, addbacks verified with tax returns, and only material changes count. Free cash flow, not discretionary earnings, drives SBA valuations, and synergies stay out. Verifying addbacks is critical for making sound loan decisions. Trust but verify. Thanks for joining us for this episode of the Valuation Desk. Behind every financial model and final value is a professional who knows how to interpret the story behind the numbers. At Highland Global, our depth of experience ensures that your appraisal isn't just technically sound, it's contextually accurate, SBA compliant, and thoughtfully reasoned. We've prepared thousands of business valuations and machinery appraisals, and we understand the details that make or break a deal. Because in lending, it's not just about the math, it's about the judgment behind it. For more information on valuation-related topics, be sure to visit our website, highlandglobal.com. Lenders know experience matters most.